what's the biggest tax mistake or a few tax mistakes you see UK-based entrepreneurs make when they're planning that move to the USA?
I think it's the not planning side is the biggest mistake in total, because you can always start testing the waters in that market. But as soon as if you're getting substantial growth in the US and you haven't planned before, you're always going to get that double tax risk. Although you're never going to be double taxed, if you're not planning for it, it can cause a lot of cash flow issues. And I think that's the biggest mistake is if you're earning in the US as a business, like are you setting up in the US? Have you also got a UK company? And then if you're subject to US tax and UK tax at the same time, how are you managing that cash flow position from a company perspective? So there's a lot of work around the treaties between the UK and US, but it's just managing the timing. Obviously, the tax years are different depending on your company year as well. So you've got the personal tax, you've got the company tax.
Are there any easy wins or great opportunities with the tax treaty that the UK has with the US? Because a lot of countries don't have a tax treaty, so it makes it a lot harder to optimize fiscal situations. But are there any really solid benefits to those, especially between the UK and US?
I think that's where it comes in between. Obviously, the UK and the US have a solid tax treaty in place, but it all depends on your circumstance. Like, is it a lot
Yeah.
of personal income or is it a lot of corporate income? How are you withdrawing that? In the UK, normally you take a small salary and a large dividend. Does that work for the company? Does it work for what you're trying to achieve in the US? Are you looking to set up in the US long term? Do you want to move to the US as well? So it's that personal and company, and that's what the problem is with the entrepreneurs is it's not just personal, it's corporate and personal. And that's the other thing is entrepreneurs, do you have a partner involved? Is there someone else involved in that business? Or do you have investors that have like a kind of a high importance involved in that business? What do they want to see from the shareholding perspective? Is it better from an investment side? Is it better from a return?
Could you comment a little bit, Jordan, for those that maybe they originally moved to the UK, high net worth individuals, but there's been an end of a regime, I believe, the non-resident. Could you just comment a little bit on that update and specifically what those folks should consider?
Yeah, and I think that's a good point actually, because a lot of the non-domiciles have been in the UK for a while. And obviously the new rules have come in and a lot of their overseas income they can potentially exempt from UK tax, which the rules are now changing that the worldwide income is going to be taxed. So they're looking to relocate to either their home country or look at new opportunities. So if that is the US, they're going to look to go to the US, back to their home country, or expand into the US because it might offer favorable tax situations on their worldwide income. Because before, the non-domicile status had a lot of benefits for these people coming into the UK, but any earnings outside of the UK, as long as they kept them outside of the UK, they wouldn't be subject to UK tax. And also recently is inheritance tax planning is a lot has been brought around inheritance tax planning and that domicile and non-domicile. So a lot of people are now going to be considered UK domicile and subject to UK inheritance tax, which is kind of pushing a lot of potential entrepreneurs outside of the
What's it like in the UK? Because the US, once you become a green card holder, a US permanent residence, you get an exemption. I think 10 mil, and then your spouse 10 mil, so it's almost 20 mil. So it's a good problem to have. But what's it like in the US, or sorry, the UK, to give perspective on the inheritance tax side?
If you're UK domiciled, you're going to be subject to inheritance tax on your worldwide income, and that's around £325,000. So it might not even cover your whole home. So if you're passing that down to like your children, then you'll be
Your
subject
worldwide assets. So
your
you get
worldwide.
you start paying right away, pretty much. Where in the US, there's a big exemption.
And that's where a lot of non-domiciles are coming to the UK. And if they're going to be subject on their worldwide assets rather than just their UK assets,
It's
it
huge.
might cause a lot of people to leave the UK. And I mean, since the budget, I've dealt with a lot of people looking to leave the UK. And it's not just UK nationals. It is UK nationals a lot because of the UK tax, but it's non-domicile. And the main reason around that non-domicile is if you've got sincere income outside of the UK, but also for inheritance tax to protect their kind of assets they've built up over their years.
And what are some surprises that you see with the UK entrepreneurs starting to do business in the US, whether it's just from a more broad cultural perspective or specific to more of the accounting and tax side?
So it depends on kind of the industry they're in as well, because the opportunities in the US, I mean, depending on what industry you are, the US like gives you opportunity in every single market. But if you're looking at like the tech, then what kind of state do you want to live in? Like what kind of market do you want to involve your business in? So it all depends on kind of what their entrepreneur background is and what they're trying to build.
And Jordan, can you dumb it down for me, but particularly those Brits that are looking to make the move? Maybe they're an entrepreneur. Like, what are the most common legal companies in the UK, and what's like their US counterpart?
In the UK, you're setting up as a limited company most likely, or potentially a partnership. But then in the US, it's what do you want to set up? Do you want to just set up like an LLC? Do you want to set up corporate? And then how are you structuring that? And then also, how are you moving money across? Like, what is the determination between the US income and the UK income? And then also, you've probably got other countries involved. You're not probably working the US UK market. Are you also looking at Europe or South America or Asia? There's a lot more involved than just the UK and the US as well from a tax side.
Does the UK still have like service taxes? Like, if you provide a service in the UK, the person that receives it has to pay a tax on top of that?
So there's VAT, and obviously you've got VAT registration in the UK. So if you're got sales of over 90k a year, for example, then you've got the VAT tax, and that's also determined if you set up in the US. If you've got income in the UK that's still over that threshold, then you're going to be subject to VAT in the UK.
Interesting. I imagine there's some pretty good tax planning there because in the US, generally if you're providing a service, there's no VAT, but if you're selling like a product online, there is, but it's significantly less than the UK,
And that's
5%,
the biggest
6%.
thing I was going to say. The biggest thing in the last 10 years is online sales. I mean, online sales have gone through the roof, as in,
Yeah.
where is that sale made? And it's not as simple as it's just been shipped to this address. Like, where's it been paid for? Where's it going? Like, who's getting this item? It does get a lot more complicated, especially with like royalties as well from online services like YouTube and other factors.
I know a lot of the tax treaties they deal with that, IP royalties, and I guess that's where it really, it's you digging in together with the entrepreneur and seeing what the most tax efficient strategy is, looking at some of those items.
Yeah, and I mean, obviously, the UK have tax treaties with over like 130 countries, and they are very similar, but every country do have different rules within that treaty. And I think understanding it to that certain individual is so important, especially when you're going from the UK and the US, because the US have their own tax rules and the UK have their own tax rules, and they're not that similar. I think it's more from a tax side is, do you actually want to move your whole business operations, and also where you're looking to employ people? Are you going to control it out of the UK, or are you trying to build a team in the UK? Because there's a lot of difference between trying to run it from the UK and just enter that US market, or move and grow into that US market.
So, for example, UK entrepreneur, they don't plan to have anyone in the UK. It's going to be very different than someone that has a 10-person team and continues to employ 10 people in the UK in terms of what they're going to do from a tax planning strategy.
Yeah, so exactly. So if you've already got a team running of 10 in the UK, you're gonna need to keep probably a UK entity open. If you want to then expand into the US, what's the best position for you? Like, if you open a US company, do you then want to hold it still in the UK and have a UK and US company, or do you want to hold it in the US and then have a UK company part of that?